Hello and welcome to this week's episode of the Stock Market Update. My name is Ken and I will be giving you this week's stock market update for conservative ETF investor. Here we are at our website on the home page. Scrolling down, we're going to start off right away with our current ETF recommendations. This week was we've had, when we get to the charts, you'll see exactly what has happened, but we've had some movement in a lot of positions, and some setups are developing as well. But here is the weekly ETF report for this past week, and we've had softening in some areas, such as gold has definitely softened up. We've only gone up 6.75%, so we've came down, and I'll show you that in the charts. Also, we came down in real estate VNQ, and I'll show you that as well in the charts. But here is your current updates. The most important thing is that we still have hold recommendations across the board. So that's where we are with that. Let me take you over to where we are doing, let's see here. This is for 2017. Our portfolio has a total gain of 5.87%. So that way you can see that. And for, let's see here, let me take you since inception. Since inception, our portfolio has gained 13%. All right, so there we are with that. And now let me take you over to the charts. We're going to start off with the S&P 500, symbol SPY. We use the weekly charts. Let me get rid of that inspect right there. We use the weekly charts in order to get an assessment of what's happening with the ETF, which is the electronically traded fund. In this case, this is the S&P 500, 500 large cap stocks traded in the United States on the New York Stock Exchange. It tells you that right here as well. This is a 5-year chart that we're looking at with weekly candlesticks. So each one of these bars represents 1 week. You can see that we're still in a rising wedge trading pattern, and we're pretty much the S&P 500 is pretty much smack dab in the middle. The S&P 500 has gained 0.68% for the week, and it's doing rather well. You see that over here on the slow stochastics, our bottom indicator, that we've bounced, hit a bottom, and now has turned positive. So momentum is now turned up. As well as on the MACD, you can see that it's bottomed and it hasn't crossed above its signal line yet, but it's well on its way, indicating that it looks like this is definitely going to go up and at least touch that upper trend line, if not go through it. The momentum is there behind the S&P 500. Let's go to the next chart on our list, which is the NASDAQ 100, symbol QQQ. And you'll see that we have, let me get rid of that inspect mode. We have gone above, and it's broken above its upper trading wedge. This was in a rising wedge pattern as well, but this is so strong that it broke out and now it stayed up. If you were not in this position since our buy, which was on January 16th, 2016, if you were not in it at that since that buy point, you could have a buy point now and use this upper which once was resistance line, will now act as support. So in this rising wedge trading channel, this upper trend line right here is a support line. If you wanted to get into QQQ at this time, you could, and you'd have a fairly tight stop in there, but because if it breaks below this rising trend, it could absolutely come down to here. And then when I go over to the inspect mode, you'll see that oh, hold on a second, let me grab that again. that would potentially set you up with a loss of 9.69%. And that would be still in a bullish pattern, just kind of bouncing in and out of this here. But you certainly wouldn't want to experience a 10% or 9% loss on your money. So that's why if you did get in here, you'd want to have a tight stop. Okay, we're down here looking at it. It's strong. You see that in the thumbnail, you can see that we've crossed above and gone positive on the slow stochastic. And on the MACD, it looked like it was going to penetrate through its signal line, bounced off of, didn't even bounce, didn't even touch it, but just before it came up and now is positive and angling up. So it's very strong. The only problem with this is that the MACD is in pretty high territory here. I mean, you can see over the last 5 years that the MACD is riding now above 4. It's actually 4.589. That's a very high number. We do expect that to taper down. And seasonality, we are now approaching the slow season. So it's a word of caution out there for anybody who's a trader. Okay, so now let's move over to our next one in line. So from QQQ, we go down to the IWM, which is the Russell 2000. So here's the Russell 2000 weekly chart. You see we're in a nice rising trend channel, and we're just in that channel right now. The Russell 2000 did lose 0.05% for the week, but which isn't much. You can see right here it really, it didn't move much from last week to this week. The slow stochastic has absolutely bottomed and is going positive, as well as the MACD hasn't crossed above its signal line, but it's well on its way. So this looks positive for the coming week. That's on the Russell 2000. Let's move down to the next one in our list, which is VEU. And VEU is the Vanguard All World Excluding United States ETF, traded on the New York Stock Exchange. Had a beautiful week with a positive gain of 1.95%. And look at the chart. This is quite amazing what it's done. We were in a rising trend channel. It's a rising wedge, actually. It has broken not only above that, but going back to 2014, we had a declining tops trend line that was somewhat angling down, and it has broken above that as well. Very bullish. Look at the candlestick. It's right at the top of the candlestick. This is acting very strong. You'll see over here that the slow stochastics came down, touched the 80 line, and now it's turned positive. It's above its signal line. Momentum is there. MACD, which is just above 1, is didn't even come down and go below its signal line and is angled up and away from it. This is very positive. Just like on the NASDAQ 100, if you have not entered, like on our buy point here, November 21st of 2016 at $43, we're currently trading at $49.78. You could use this breakout pattern as a buy and use this support line as your stop. So this way it could get you into the position, and if you wanted to, you could go into this in a very conservative way. And as an example, let's assume that you wanted to enter into this ETF of VEU, and let's just assume, just for round numbers, that you wanted to commit $100 into this ETF. Instead of buying $100 worth of the ETF, just put in 20% or $20 worth. Now, this is just a round number for an example. We could use the number $100,000. Instead of buying $100,000 worth of VEU, just put in 20% of that, which would be $20,000. Go in with a 20% stake, and then see if that goes up 2%. If that goes up 2% above your buy, go ahead and put a stop in on that $20,000 for those number of shares at your buy point with locking in a 2% gain. Then you can go ahead and commit another $20,000. And that way you can enter into the position very conservatively while it's at these levels. Okay, so that takes care of VEU. Again, we're on hold patterns across the board, so we're just going through the charts to see what's happening. Next one down on the line is bonds, 20-year Treasury bonds. You see right here, there's our symbol is TLT. It's 20-year Treasury bonds traded on the NASDAQ. We've had a net down week. It's down 0.66% for the week. Now, looking at our trend at our chart here pattern, again, candlestick weekly chart, 5-year pattern. You'll see this declining tops line right here. What did this ETF do? Well, bonds came up and 3 weeks ago came up and almost hit that declining tops trend line, didn't quite make it, and then came down and has been soft and has traded down ever since. Now, there's another trend line in here, and that trend line is right here. That trend line is from this cluster right here, and those were the tops. They were acting as resistance all this time. Then it broke out of that pattern, which once was resistance will now act as support. Now, depending upon what this ETF is going to do, if it's going to hold that support, it's going to hold that line, bounce off of it, and come back up for another attempt to go through this declining tops line, which would be very bullish, because then we could come up to this line over here, which is a 2015 high, which would give us an opportunity to come up to the 130 level. We're trading right now at 121.29, so we would love to see that happen. If it does not hold this support level and it breaks down below it, then there's a good chance that we're going to come down and test this support line down here, which is down closer to 115.50. So, well, we're in holding mode to see what's going to happen with bonds and how well it's going to react. Okay, down here at the slow stochastics, momentum, we've definitely lost the momentum, and you've known that because for the last 3 weeks it's hit that top and it's coming down. Well, it's showing up right here. You can see that we are trailing down right there. And over here in the MACD, although it's positive, it is starting to lose its momentum and curl over. You can see the bars starting to come down here. So we're on holding pattern for TLT. Moving on to the next ETF, which is real estate, VNQ, which is the Vanguard Real Estate Investment Trust ETF, traded on the New York Stock Exchange, currently trading at $82.40. It had a down week, went down about 0.47%. Now, looking at the chart pattern, what happened? Well, the ETF came up, hit this top small resistance line here, and it did not have enough power to get beyond that and get to this next resistance point. Instead, it completely bounced right off of it and has come down. You can see right here in the thumbnail that large bar from last week and now this week. But this week now it came down, found a support level somewhere down here at $80.75 a share, and now has come up. So we have two things going on here. We have a declining tops trend line, we have this support line, and then we have this line that's way up here. Right now it's trading between this declining tops line and this support line here, as well as this rising bottom trend line. So we're watching this to see which way it's going to go. Is it going to go up? Is it going to go down? All we can do is wait and see. Let's look at our momentum indicators. We've definitely lost momentum here on the slow stochastics. It's negative and pointing down. On the MACD, it's kind of bouncing around a little bit, but at this point in time, it's reached a top and it's trading down. It looks like it's going to cross below its signal line. So it appears as if it's going to come back down and test or touch either this rising bottoms line or this support line right here. So we'll see what it does. All we can do is wait and watch that one. That's on VNQ. Mind you, if you're in VNQ, VNQ is paying you a nice 4.43% yield. So that's not bad. You're getting 4% return on your investment on this one here. I know that banks and CDs are not giving you 4% return. Okay, let's move on to the next one. GLD, gold. Gold did exactly what VNQ did. Came up to a declining tops trend line, hit it, and did not have the momentum to go through it and went down fairly hard. We've lost 3.11% for the week on GLD. So GLD is now below this rising tops trend line. I also had another trend line that was a little bit shorter term trend line. It's broken below that trend line right there. You can see that right there. And it is now going to come down, and it looks like it's going to test the support level here. If it breaks below that, well, here's your next support level, this rising bottoms trend line right here. And we've lost the momentum. Absolutely, you've lost the momentum on the slow stochastics. And you can clearly see a top right there on the MACD. Hasn't crossed below its signal line, but it is looking like it's definitely going to come down and at least test the 115 level. If we break below the 115, then it looks like we're going down to the 110.50 level. So that's where we are at with gold. All right, let's move on to our next chart that we want to look at. The next one on the list is going to be the VIX. Now for the VIX, we don't use the weekly chart. We use the daily chart for the WIX, and our time frame is not going back 5 years. We go back 1 year on the VIX. So we've got our candlestick chart going back 1 year, daily bars on the VIX. And look at how powerful this chart is looking. This is looking very powerful for stocks, which by the way is not good. Which by the way is not good for the bonds and is not good for gold, because stocks are very strong right now because the volatility index for the S&P 500, okay, you can see that we're trading below this blue line and this red line. The blue line represents the 50-day EMA, the red line represents the 200-day EMA. The 50 is below the 200, that's bullish for stocks. The VIX is trading below the 50 and the 200. That's bullish for stocks. And look at the momentum of the 50. It's traveling down. So in every way that you're looking at this chart, that is very bullish for stocks. Okay, let's move on to the next indicator in line, which is the VXN. This is the volatility index for the NASDAQ 100. And again, just like the S&P 500, the VIX, the VXN volatility index, very bullish. Your 50-day EMA is below your 200-day. It's traveling down. That's bullish for stocks. And the indicator is at a level below the 50 and the 200. Again, all bullish for stocks. So that's where we land on all of our charts that we want to look at. Let's go back to our home page for Conservative ETF Investor. I'll upload this video right here on the home page so that you can click there for future viewing. And on our current recommendations, there we are right there. That's where we land right now. Yes, that's where we land right now. And that's it. That's it for this week's update for your complete recommendations for the charts and everything. I hope you've enjoyed this, and please subscribe and get other people to join as well. And thank you.